A lot to take into account here. I'd like to bring in mortgage advisor and host of the Rate Update, Mr. Dan Frio. Dan, great to see you.
Mortgage rates are falling. Home prices have stopped climbing. So why does buying a home still feel impossible? In this 2026 housing market forecast, mortgage advisor Dan Frio breaks down the real data behind affordability, mortgage rates, home prices, and what buyers and homeowners need to know heading into 2026. No hype, just the numbers that actually move the housing market.
Are you a homeowner still sitting on the sidelines waiting for that housing crash? Maybe you bought that house and you're trying to figure out, okay, what's my market going to do in 2026? So my name is Dan Frio, folks. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. My goal each day is to come in and explain to you guys usually what's going on with mortgage rates. So today what I want to talk about is my 2026 home affordability forecast. Over the past few years, we've basically seen home prices just flatline. We actually see mortgage rates come down from their highs, and you're also seeing home prices and home costs still unaffordable. So what's the culprit behind all this? Is it home appreciation? Well, the markets there have been pretty flat over the last couple of years. So what's actually making homes unaffordable, or what's making homes affordable? In today's video, what I'm going to provide is my 2026 forecast, because where you find home affordability is basically where you're going to find the markets that most likely is going to see appreciation in 2026 and beyond. So without further ado, folks, let's get over to today's breakdown so I can explain to you guys what most likely is going to happen to real estate in 2026 and the whys behind it. So right down through here, the core insight right through here is home affordability didn't break because home prices keep rising. It's because everything else keeps going up, from property taxes to home insurance. So if you're new to home ownership, before you really go any further, you have to understand what makes up your payment. And that's figuring out what is most affordable to you. So what you have to figure out is what your total payment is. It's more than just that loan payment, because you're going to have to pay property taxes and also real estate insurance on this. So when that all adds up, and that's the biggest piece that's making homes prices, making the cost of homes and home affordability at the lowest levels we've seen in decades. So today what we're going to talk about is, how do you really narrow down which areas are going to prosper in 2026 and which areas you might want to avoid, and the whys. So let's get over to today's video. So first off, I want to make sure you guys go out and watch my other videos that I put out. I put out a forecast every year over the last 4 or 5 years. Just make sure you go through there and grade them. Make sure you also look at the other YouTubers that you follow and grade them as well. Are you giving them an F? Well, why are you still following them? Are you giving them an A or B? Well, make sure you watch them more often. But we're not here for that. We're here for home affordability and where I think home prices in those areas are going to go in 2026. So let's break down this. The first thing I want to show you guys is what home prices have done nationally or throughout the year since 2021. This is when everybody kept saying, okay, we're going to have that huge housing crash, worse than 2008. Well, let's go through this and let's see what the numbers actually look like if you really get into the facts behind everything. So if we go back to 2021, we had the FHFA, that is one of the indexes we're going to use here for home prices, actually at a 556. So that's just going to be our baseline right through there. But it's saying year over year in 2021, we saw home appreciation of about 18%. Okay, in 2022, and this is where everybody started saying, okay, we're going to see the crash worse than we've ever seen in history. Well, in 2022, that same factor came in at 617, and that is an appreciation rate of 11%. And then they said again, once again, 2023 is probably going to be really bad. Rates we saw in that year went all the way up to 8%. We thought the housing market was going to be completely a disaster. What did we get for that year? Well, home prices actually continue to go up at a 5.5% appreciation tick in 2023. And once again, folks, that is when interest rates peaked at 8% on the 30-year fixed. Then you go on to 2024, and my bad on this one, because in 2024 and 2025, I expected a complete flat market. Well, we saw appreciation in those years as well. We got 5.6% in 2024. And so far, we're not just at the end of December yet. We have days away, but we're still at an appreciation rate of 3.2%. So I would take these all day long versus that housing crash we saw in 2008 of, in most cases, about 30 to 60% decreases in home values. Okay, so now let's get to the next piece of this puzzle that we really want to focus in on. And this is right through here, property taxes. I live in the state of wild, wonderful Illinois. We have the second highest tax rate in the country, and I can vouch for that. The only person beating us in this is the people in New Jersey. So congratulations to all you guys in New Jersey. You have the highest real estate taxes in the country. This is bad, folks. If you want to put it in relations to how other places in the country or how much they're paying, let's scroll down through here. If you're looking to move in Hawaii, that tax rate is 0.27. Colorado coming in at 0.49. The highest in the bottom five is Delaware at 0.57. So you can pay a tax rate of 0.57 in Delaware, or you can pay a tax rate of 2.26 in New Jersey. What is that? 1.5% higher on that effective tax rate. So a lot of these states, that's how they're surviving, just pushing this off to the homeowner. So that's your real estate taxes that we want to go over. The next piece of this puzzle that's really pricing people out of the market, especially in Florida, is your homeowner's insurance. Really realize a part of your housing payment, when you buy that house, you have to insure it. Well, if you're living in Florida, your average premium is about $11,000 a year. Think of it, $1,000, almost $1,000 a month in homeowner's insurance. Okay, how's that in perspective to the rest of the country? If you go down through here, the lowest is down through here, with the highest in the top five of $950. That is basically what these people are paying a month. So that's where you're seeing a lot of the insurance pieces hit. Now, affordability, well, here's where people are saying the most affordability is going to be in the country. And these are the areas that are also going to see appreciation in housing. So let's see how they've done. Let's see how they fare. And why are people going to most likely flock to these areas, or why most likely these home prices are the ones that are going to go up? Well, supply demand. So if you're living in Cleveland right now, it only takes 22% of your income to qualify or buy a home. Home prices since 2021 are up 33%. So you're getting into a good market. Some markets are up much higher than this, but it's a market that's been going up, and it's most likely going to continue. You go down through here, same thing with St. Louis. You go all the way down to Pittsburgh. Pittsburgh, it takes 25% of your income to qualify for a mortgage, and that home prices have gone up 25% since 2021. So what my expectations are this, folks. I'm going to be coming out with my rate expectations in about a week, and that's going to correlate with a lot of these. But I'm going to jump on the bandwagon with all the other analysts. They're coming in saying, okay, this is your top 10 markets in the countries and why. And I'm going to have to say, I agree. Because you're having properties in Cleveland, they're doing pretty good. They're up. You have an up market. It takes just a quarter of your income to qualify for housing. And you also have low taxes and low insurance. That's going to keep homes affordable. And if you're affordable, you'll have a home appreciation because you're going to have more demand for that area. So what actually creates home prices, what creates the price of anything, is supply demand. The higher the demand or the low the supply, the better it is for home prices. So you're going to continue to have that lock-in effect, and that's when it's what's going to really stabilize housing. That's why you really saw a lot of people taking their houses off the market. We have one of the biggest delistings that we've ever seen in history. Why? My expectations on it, and a lot of other analysts were saying the same thing. These people don't have to sell, which is much different than where we were in 2008, where people had to sell or they were getting foreclosed on. Most people just walked away. So if you really want to know where the home prices are going to be the most stable or up, you're going to see these areas right through here, the ones that are most affordable. The areas that are probably not going to fare so well, let's go down through here. The least affordable. Well, you have topping the charts, California, 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 Hawaii, okay? In San Jose, California, it takes 68% of your income to qualify for a mortgage. Home prices are up. Well, home prices are up all the way across the board. That's why I keep scratching my head when everybody keeps watching these home crasher videos where these guys have been wrong for now 5 years. 5 years. So again, make sure you do your due diligence. Go back, and the people that you're watching, give them a grade. Don't give it your gut feeling. How have they actually done? And those are the ones you want to subscribe to the ones that done good, and the ones that didn't, make sure you delete them and get those out of your life. So my expectations is the same as everybody else. I'm thinking these are going to be the top 10 markets in the area, but I'm also not expecting a market crash. I'm basically going back to where I've been the last 2 or 3 years. I'm expecting home prices to be flat as a pancake once again. Yes, we're going to have areas like Austin and parts of Florida and maybe Texas that are down, could be down double digits. But that also means there's areas that are up double digits as well. So there's not going to be a national crash. Sorry to disappoint you there, but if you're in an area that's throughout the rest of the country, not one of these top 10s down below, don't fret. You're probably going to see nationally a 3 to 4% appreciation in your areas, because those other areas like Austin and Florida, especially parts in Florida, they're going to see some more declines in their prices, but investors will finally, there'll be an equilibrium and they'll jump in and gobble those up. So folks, my name is Dan Frio. That is my 2026 forecast. If you're a homeowner right now and you need some assistance just trying to figure out, should I refinance? Should I wait? Does it make sense? Do me a favor. Put your information into the RateWatch tool right up through there. Let me know what interest rate you'd be interested in refinancing. We don't sell the data. I'll be reaching out to you. If you're out there looking to build or buy in 2026, reach out to us. We'd like to get you pre-approved. You can give us a call. You can put in your application. You can request an appointment, and we got a lot of other information throughout our website and also our YouTube channel as well, with over 6,000 videos out there. So folks, my name is Dan Frio, the host of the Rate Update, and also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. And our slogan is this: one application, one credit pool. We're going to compare your loan with over 30 other lenders. How do we do it? Well, subscribe down there and you'll learn every day how we do it. Thanks for watching, folks. Hope to win you as a client. Take care. Have a fantastic 2026 and beyond. Bye-bye.
It's a struggle right now to buy a house, and that's why I love the caption that you guys had. Is this going to help or really hurt the markets? And then you think, if your payments go down, this is going to push more people from renting to buying. So then ultimately, what's going to happen with the home prices?
Right.
They're probably going to go up as well. So you have home prices going up, taxes going up, insurance going up. So in the long run, I think it might just be a ploy to get more and more people in there, because the savings really doesn't add up when it comes to the payment.